Hello traders, Gary Wagner here. Approximately 11:45 a.m. in Honolulu. It is Wednesday, the 30th day of November, and this is the daily report for gold and silver. Traders, we are seeing these markets in a major way across the board break out to the upside, starting a rally that is unprecedented in terms of its scope and the fundamentals behind it. First, to the ticker board, we have gold trading up a little over $30 today, currently trading approximately $17.46, and that is our cash print. If we go over to the continuous contract, $17.50, and that would be basis February's gold in the COMEX. Silver, also incredible, showing up approximately 2.85% at 32 plus 32.80, putting it up almost 90 cents on the day. Now, for the first time in history, we had a unified resolve of all of the central banks, the powerhouses in terms of the currencies. You had 6 central banks, which were led by the Federal Reserve and the European banking system, all go in and flood the market with cheap money. In other words, we've had quantitative easing squared. This, to me, is absolutely a game changer. And here's the reason why. What we're witnessing, these rallies that we're seeing, I understand gold. The stock market, yes, we've had global rallies in the equities markets pretty much across the board. With this kind of capital infused into the system, they will be able to stave off any kind of default or drastic scenario in the EU. However, traders, are we either A, putting our finger in the dike? In other words, we're just simply passing the buck, because we're going to have to pay for the printing of this money at some point. Therefore, you see this tremendous move in the precious metals markets. Now, because of that, I have a revised count on our gold Elliott wave count, and I kind of want to go through that first. So I'm going to pull up this chart. It is a 480-minute candlestick chart. And as you can see, we are looking at the major count. And so if we simply go through it, we have the top of 3, consolidation, there's 4. This is our large 5th wave. It's called the orthodox top because we got an A and then the B was actually above it, C. And it's now my belief that we are currently back in an impulse phase. This is my count, 1, 2, and we're actually still in 3. At first I went, this would be 3 and 4, and we're in 5. However, if you look at the lows that we reached down in this area, you see that they go into this corrective wave 2, which means that that wave could not have concluded. 3 is still absolutely intact. So you have 3, which is continuing here. We'll get a wave 4 and then a wave 5. I do want to apologize to you, my subscriber, for getting our signal to you to enter the market from the long side so late in the breakout. When I looked at the market last night, it actually touched to about, I believe, 1702, 1705. Short term, it was retracing. And when I awoke, I saw the market break above up $31. My sentiment is, as I spoke about over the last couple of days, the actual pattern that we saw, let me go ahead and pull up a daily chart. As you can see, this is that engulfing bullish right in here. We really didn't see that follow through on the following day. Of course, this is the trading day today. Tremendous move to the upside, up about $30 on the day. Traders, we are looking at a daily chart. This is the cash month of silver. And as you can see, this is that phenomenal move to the upside. Interestingly enough, notice the point in which it finds a little bit of resistance. This is the 32.90 point, market currently trading 32.78. just below it, and you can see that it's come just up to this band of resistance. Now, in terms of positioning ourselves on the long side in silver, I'm comfortable entering once the market breaks above this particular resistance area, or if we get a small dip and then to enter into the market. Either way, my sentiment is silver is going to follow suit with gold and with the equities markets globally performing in the way that they are. The news about China and the fact that their economy is a little bit more robust than first anticipated, my sentiment is silver is also poised for a major upside move here in the next couple of months. So traders, overall, what are we looking at? Well, we took a position in the gold market, and we took that this morning roughly in this area. As you can see, continuous contract right now of gold, and this would be basis the February COMEX contract, 1750. You should be in roughly around 1748. In terms of stops, we need to place them well below these bodies here, and so that would be below 1710 on a protective stop. In terms of the silver market, I am waiting to see how the market reacts as it approaches this very, very critical area in terms of resistance. Because in essence, what we need to see is the market move and close above 3290. We're very, very close to it. I do not anticipate much difficulty whatsoever. Traders, what an incredible day we have witnessed in the market. You know, as I was first being mentored in my early days in learning technical studies and technical approaches, I was told the following story by one of my mentors. And what he said was that as a technician, we are simply on a ship, standing at the back of the ship, looking at the wake that the propeller creates. We describe where the market is going by looking at where the wakes are, in other words, where the market has been. However, only the captain knows when he's going to turn the wheel. And today, the wheel was certainly turned. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.